Perfect. Thank you. First of all, I would like to thank GBC for the opportunity to be here to present, and yeah, I'm really excited and look forward to present Epti. So let's just jump right in. Before we jump in, might a little bit short about my background. I'm the CEO and founder of Epti. Grown up and originally from Bosnia, and grew up in Sweden. Lived there for 25 years since 1993, and since the last 3 years now in Munich, where Epti has its co-headquarters. So Epti is a Swedish company that I will talk a little bit about. So my background comes from a technical background. I'm in tech now for 30 years. Been building companies for 23 years, have had 5 exits up until the point of Epti, and have been working both in building IT service companies and as a technology founder for software companies. So Epti is basically a combination, the combination of that. So what Epti is, it's an IT service and software development company with an investment arm that focuses on European tech companies. So as you can see on the right side, we have 2 business segments: Epti Service, where we have 100% owned, 90 to 100% owned service companies, where the scope of business is IT services. We get more into that later. And on the right side, we have Epti Invest, where the scope of business is investments. So this is basically the 2 business segments of Epti in balance to each other. A little bit basics about Epti. Founded 2017 by 3 founders, myself and 2 more founders. The headquarter is in Stockholm. It's a Swedish company. The co-headquarters here in Munich, Munich at Viktualienmarkt, where I'm sitting right now. We listed in 2021 under the ticker Epti on the Stockholm Nasdaq, First North Growth, and now as well this year in Frankfurt, Cetra, and Stuttgart. Epti has currently 228, to be exact, full-time employees, and that's in Epti. So in the 100%, 100% owned companies in Epti, and in the portfolio companies, there's another 450 approximately people in those minority held companies. So in the last 5 years, we've been growing from the 3 founders to over 200 employees in 8 countries. We have about half of our employees are in the Nordic region, so in Sweden, and half of the employees are between Munich and Croatia and the Central European area. So we have a quite good split between Nordics and Central Europe. To go into a little bit about our business segments, as I mentioned. So Epti is operationally divided into 2 business segments. And this gives us the flexibility to basically screw up investments, take down investments, and also continue increasing service over time as to increase profits and cash flow. So talking about these 2 business segments each, if we start to look at the left side on Epti Service, the scope of business is revenues and cash flows and profits. So that's on a recurring weekly and monthly basis. We work with IT services and software development with 5 majority-owned operative companies with over 200 employees, whereas 75% of those 200 are programmers and engineers. That means that engineering army of over 150 great skilled co-workers and people that we have within Epti Service that work with daily on programming. So it's a buy, build, and hold strategy. And in the first 9 months, we can see revenues of 11.9 million euros with an EBITDA of 2.6. That means that that means that this margin is 22%. And if we look at general Swedish consulting companies, as we are a Swedish company in top, and all of the companies are Swedish legal entities, there's only 6% of IT consultancies that have over 20% margin in all of Sweden. So that is what's called in Sweden a super consultant. So it's a super consultancy group where we are having constant cash flows, constant profits on a weekly and monthly basis, recurring, where we have over 20% margin. And the reason we have such high margin is, of course, our spread across Europe between 8 countries, having a very well balanced cost in terms of having great skilled employees, but spread across Europe, but with one and the same Swedish price outwards towards our clients and so on. So that explains that side. Now, if that is now, as I explained, the fast fast cash, so to speak. It rolls weekly and monthly. We take those profits and then we invest that into technology companies on the invest side. So we don't take more than what we make in service, and then we invest on the right side in the investment holding. And that's what I call slower cash. So that means that we're talking about proceeds from exits, which are yearly. But it multiplies the great margins we have on the left side of service of over 20%, and it additionally multiplies that over time in technology companies where we are also providing marketing, tech, and sales services from service, but not only to the portfolio companies, of course, and we will go to that a little bit more. But that means that we are also in the driving control of where the technology goes, how the company grows in terms of marketing and so on, which means that we have full insight in terms of the KPIs on how those companies are growing, and we can make very well informed decisions on where we want to invest within those companies. So it's an investment holding currently with 19 minority-owned companies. We're on the process of divesting down to about a dozen, where we want to keep our balance, and we are in the process, as we have been very open about as well, that we are divesting and talking about have a couple of companies that are in the exit process, while we're also looking at acquiring additional service companies. Now, on Epti Invest, we have a buy, build, and sell business model. That means that each company there will be sold at one point, and the average horizon is around 3 to 5 years when we exit the company. But they continue being in so far in 5 years, not a single invest company that we've exited has stopped using Epti service. So it's a great way to also make more money in terms of multiplying the margins, but then also keep on making money after we are not owners in those companies. If we look at the realized return on investment, we're looking at 6.5 times the capital invested so far. We're only 5 years young. So when we look at the exits we've had, they have been in the past 2 years amounting to around almost 5 million euros, where we have had a return on investment of 6.5. Now, if we look at the net asset value, that multiplier is even higher, but we focus on the realized return on investment here. If we look then about in regards to how these two business segments work together and the synergies, we can see that the listed company Epti in the top, where we are 15 people, work with management services that, of course, are strategic planning, controlling, accounting, but the most important one is business development, M&A, and HR, because we're talking about a lot of talent here, acquiring and retaining talent, very important for us, but also in terms of business development, how to increase profits, how to get more customers, and M&A. We provide those management services down to Epti Service and Epti Invest, and they in turn then provide, as you can see, the yellow lines on the left side, IT services, and on the black line on the right side, investments to customers and targets. If we go into deep dive a little bit in those business segments and we start to focus on service, we can see that we have five holdings, which are 90 to 100% owned. And all of the holdings that have Epti in front of them, we have started, founded and built up from the ground up. The other 3 we have acquired in the last 10 months. So we're talking about 3 acquisitions and 2 companies we've started, and we have made acquisitions very successfully, integrated, increased profitability, continued to increase talent inflow, and so on. So we use our know-how to, after we acquire, to retain talent, but also to increase profitability and add more customers. So if we look at some of the customers that we're not talking portfolio customers, just to mention a few, we are a big supplier to the Swedish defense. We are a big supplier to Klarna, the biggest fintech in Sweden, Tele2, one of the largest telecom operators, Mojang Studio that makes Minecraft, so we work on the game that is owned by Microsoft. Scepter, many may know it from the Formula 1 tracks, 60 countries, 80 million customers, and Discovery. And if we look then again at those figures, 9 months, we're talking almost 12 million euros in revenue with 22% margin. That's what's called the super consultancy group. We intend to continue acquire, which is also very public information in terms of looking at our reports and our investment relations and our presentations, that what we currently focus on is acquiring additional service companies where we own 90 to 100%, that we can continue increase the profits and continuous cash flow on a monthly basis, so that it gives us more space to focus and invest more into the investment holding. So talking about the investment holding, technology companies, software as a service companies, business model is licensing, IP, recurring, whereas of course with service, it's time and material. So we are looking at an online pharmacy, for example, Apotekamo, which is the fastest growing in the Balkan region, from Yugoslavia region. We have Workamo, which is a freelance gig platform in Sweden, owned by the largest accounting firm and second largest bank together with us. We've Invio, which is a Facebook for Facebook events, but for companies. So it's as easy to set up as that and send out. Space, the world's largest esports center that was started by Björn Ulvaeus, the founder of ABBA, Conny Jonsson, the founder of EQT, and us, 7,500 square meters in the center of Stockholm with huge esports arena, 127 square meter Samsung screen. We were globally the largest Samsung customer last year. Model management, an online modeling agency with over 2 million professional models, customers such as Louis Vuitton, Chanel, etc. They cast their models from digital and online database nowadays, not physically as it was in the past days. Just to mention a few of our holdings and customers of those holdings, you can see BMW, Porsche, Bonnier, H&M, Red Bull, just to mention a few. The net asset value of that portfolio currently is 34.7 million. And as I mentioned before, the realized return on investment so far is 6.5. If we look a little bit where this is spread across, we invest in 4 industries: gaming, fintech, marketplace, and software as a service. And we are more heavy on the marketplace software as a service part, obviously, as that is a very, very nice business model to have with great margins. But overall, if you are interested in knowing more about some of our companies, feel free to go into our website and read more about them, of course, on epti.com. Going in a little bit on the net asset value. So our current net asset value per end of September in Q3 amounted to 68.5 million euros. 33.8 of this is related to the business segment service, and 34.7 is in the business segment invest. So how do we calculate NAV? So it's based on Swedish accounting principles. When it comes to service, it's a very profitable business segment. So we use, of course, the profits, the 12 months trailing profits times 12.5 EBITDA. And why 12.5 EBITDA? Well, we've grown with 37% organic growth. We have over 20% margin year over year. We have grown with revenues of 79% compounded annual growth rate per year. So we are a very fast growing company, from 3 people to almost 250 in 8 countries. So if we look at some of those KPIs and unit metrics, you can see that our peers listed would be evaluated some even to 20, 17, 18, 19, we would be about around that segment. If we look at the more slow growing, or let's say stagnated consulting companies, we're looking at closer to 10, 11. So we've decided to put us more on the safe side, the closer one to the more conservative side, but still have a little bit of an add-on, but quite low, with lower than our peers. So we're at 12.5. So if we take the 12 months trailing EBITDA times 12.5, but we don't use discounted cash flow, then you get the net asset value of service, and it amounts to about 50% today of the total net asset value. If we look at the segment invest, we use the last post-money valuation that was made in the last financing round as a basis for the sum of parts calculation. So when there is no financial round available, we of course use then invested capital or book value. And if the post-money valuation has been too far back in history, or if the market valuation peers, transaction multiples changed, we then use an estimated value based on these transaction multiples and pre-group valuations to give the investors a fair value of what we think. And a good example of that is if you see the dip in invest NAV between Q1 and Q2, that's a voluntary write down that we did based on exactly this fair valuation, where we are looking at, okay, say the last financing round could have been in January, February, December before that, but we see that the market has shifted, multiples are looking differently, so we made those adjustments, voluntary, I might add again, and then we are looking at a more realistic net asset value of currently of 68 million. As I mentioned before, we we've developed very fast in the last 5 years with a compounded annual growth rate of 79% year over year in the revenue and 73% year over year on the net asset value. So if we look on the left side, you can see those numbers represented throughout the years, and you can see that we've been growing very fast. Now, the bottom part that you see, the dark part here, is representing service, the service operational figures, or it represents the group consolidated figures, but of course the service operational figures, as those are the majority, and that's where we are making the constant cash flow profits on a monthly basis. So we can see that during the first year, we had a revenue of 1 million, where we had 80,000 euros in EBITDA during the first year. We grew from 3 founders to 15 people and a net asset value of 4 or just over 4 million. We fast forward to today, we have almost 80% revenue growth year over year, profitable EBITDA basis when it comes to what we call is Epti, the engine service, and of course Epti, and a 73% increase in NAV in total year over year. So if we look at last year's revenue, the total revenue was 10 million. We look at the consolidated revenue this year, as we had some majority-owned companies. I get more into that in the beginning of the year at 16.7. But if looking at service, only service is already at 12 million during the first 9 years. That is 20% more than the whole last year's consolidated, including a bit of the majority-owned investment companies, 20% higher during the first 9 months only in service. So we keep on growing fast. So if we look at those margins, we have an organic growth that landed on 37% and a margin change on the consolidated group level from minus 19% to plus 8% in the first 9 months. Why was that? When we listed during December, we had still a couple of big companies fast growing like Apotekamo that is taking in first market entry position, becoming the first online pharmacy, for example, for a big region of 30 million people with strong backers, strong investors, but that also means it's burning cash. And since it was consolidated during the listing and the first half of this year, you can see that those numbers, of course, affect our ultimate group EBITDA. Now, as we have the goal to be minority owners and are going to and are minority owners of the investment holdings, this was already put in plan that during the first half year we would divest, we would have new rounds where we dilute down under 50%, and that's exactly what happened. So you can actually see that the revenue per business area, the top blue part, is decreasing now in terms of consolidated part into our figures. But the more important thing is if you look at the revenue from the dark blue part, that is the Epti service area. So you can see that service is increasing over each quarter to reach to the same levels where we have been anyways with the consolidated companies within our invest business segment, while the invest business segment is decreasing as we don't consolidate those. And that gives a more true picture and proper picture of Epti, as it is 100% owned companies and Epti, that then gives you, as you can see, going from minus 1.1 million, minus 1.9, 1.1, and up to plus 500,000 now in Q3. So going that a little bit in table format, we can see that Q3 we had revenue of 5.5 million with expenses of 5 million and an EBITDA of 500,000 euros. And looking at the business segment service, as these are the consolidated one, we can see that the EBITDA is 2.6 million in that segment, going back to that margin again of over 20% or over 20%. Looking at our consolidated balance sheet, it increased by 57% with an equity ratio of 59%. And what maybe most important thing here to talk about is if we look at the debt side with Q3, 13.2 million. 5 million out of these 13.2 million are non-cash flow affecting debt. That means in Swedish standard, when you have an acquisition where you are paying with shares, as we are, then you put that on the debt side. So those are earnouts and conversions that happen now in Q4, where 5 million goes from debt to equity instead. The remaining, then, if we look at the remaining 7.5, we look at from those 7.5, 6.4 million is operational debt and only 2.1 is interest bearing. So from the 13.2, we have 2.1 million euros in interest-bearing debt. The rest is divided between debt that converts in equity or has converted now in Q4 or operational debt. If we look at the share price development, I mentioned a lot of unit metrics, a lot of KPIs here, pointing all upwards, 57% in year organic growth, 34% in the 9 months. We have revenues growing of almost 80% year over year, 20%, 22% margin in service, NAV that grows, etc. Everything pointing towards the right direction. But if we look at the share price, we are seeing, unfortunately, due to other circumstances, we're looking at a share price that's opposite direction, so not connected to actually the fundamentals which I'm presenting. If we look at the average trade volume per day, we have around 15,000 euros. Outstanding shares, we have 107 million shares. The current share price is around 20 cents. The latest GBC target price recommendation with buy was 85 cents. What I like about this slide most is to look at the right side, which is a very, as they say, a picture says more than 1,000 words. So if we look at the market cap in Q3, we can see that it's at a high discount if only look at the service, it's even at a high discount to that one. So what that means is that we are being basically traded at the 6-7 times EBITDA, where everything else is free on top. And looking at the fast-growing company with this kind of unit metrics and health, 6 and 7, comparing that to other peers might say a lot. So looking at that picture, I think it's always very interesting to see that we are looking at the market cap that is quite much lower than the cash flow positive business segment that we have, and then invest on top. As I mentioned a little bit, stock data, we have the listings, as I mentioned before, in Cetra, Frankfurt, and Stuttgart on top of Stockholm. Shareholder structure, we, the founders, own and control 45%, management and board 25%, the free float is 30%, and we have around 2,500 total shareholders. We are very active on the IR conferences. We were in the IG Capital Forum in Frankfurt. We were in MKK in Munich before that, prior in the Equity Forum, and now in the International Investment Forum. So very happy to be here again, saying that to present, and hope to meet a lot of you that are here again on the next conference as well. If you see us, please come up and say hi. We have had the Q3 report just released on the 15th of November, and the annual report is due on the 23rd of February. Last but not least, a little bit on the team, and then I think we finish. So I told you a little bit about my background, but we have Adam Bäckström, CFO in Stockholm, Måns, Deputy CEO in Stockholm, Halida and Sanin, co-founders in Munich and Croatia, and Fredrik Dahlborn, Chief Legal Officer in Stockholm. And the board is Swedish and the German members. So Hans Isos in Stockholm, chairman of the board, Stefan Ulrich Fleissner from Munich, board member, Susanne Rönnqvist in Stockholm, Sebastian as well in Stockholm, and William as well in Stockholm. So all investors, all with backgrounds of being in public listed company boards, building up companies, entrepreneurs as well. So very good and happy to have that board with us, and of course the management and team. And overall, we have co-workers, as I mentioned, or employees in 8 countries. The average age is 34. The split between male and female is 68 to 32%, which is very high for tech company. So we're proud about that. We take an employee net promoter score every 6 months, and it's always between 65, 75. Which is from -100 to 100, and that with 90% of response rate. Anything above 50 is what's called excellent. So we are very keen on having a good working place and retaining our talent, of course, because that's how service keeps on growing. So that's a little bit about Epti. I think I covered most of it in time, I think. So yeah.
Yes, Adi, thank you very much. We just got one question in so far, but of course you can probably answer it. What can you say about the plans of Apothekamo and its potential IPO?
Yeah, very interesting question. Of course, with a product like Apothekamo, it is a very interesting case, as it basically takes what exists in Shop Apoteket, Doc Morris, or even better comparison with Apotek in Sweden, which has 400 million euros in revenues and is profitable from day one. And we have a second largest as well pharmacy in Sweden, also quite big and profitable. And all of these online pharmacies also have plans to list, very openly talking about that. So there is, of course, an idea to continue looking down that path, as it is a company that that has idea and vision that has been proven in other markets, coming into a market where it didn't exist, us being the first mover, taking the market space, being the first one with an online pharmacy app in a region of 30 million people, where you are in literally in the modern Europe, where we have young people that are on TikTok and Instagram, on all of these places where they want to consume from their phone, and we are being the first one there. So of course, from that side, it is interesting to potentially list it, as it can attract even more people to invest. I think it's an idea that from retail investors to institutional to professional and to family offices is something that is quite easy to grasp and follow, while it also has been done before. So it shows basically, as I say, a pattern to how to do it successfully. So I think that is a very interesting, and if we would do it, it's a Swedish company, but we will be looking at a listing in the DACH region, as it is closer to this, between the Nordics and the Balkans where we are active. I think that could also be, or it is the right way forward. Of course, it's still we have to see, but if it happens or not, it's nothing that we can comment on. Will happen for sure, but it is one of the pathways that we're looking for, of course, for Apotek, as it is that type of company as it is. And
looking at your current significant undervaluation, the market cap is currently at about 21 million and the NAV at about 70 million. Do you think about a share buyback program?
Yeah, and that's of course we think about that, and we would gladly do it if we were allowed to. Unfortunately, the Swedish law for Swedish companies are not allowed to own shares in themselves or do buybacks. On that list and level, we are only on the highest mid and large cap lists. Are you able to do that? So that puts a little bit of a practical obstacle for us. But of course, we're always looking at ways if we could do a buyback program in some way that is allowed and that we can do in an effective and good manner. This is of course something that is very interesting for us as well. But at this point, First North companies, unfortunately Nasdaq, don't do buybacks as they're not allowed to. So we would need to change the list first and go up to another list to do it. So that kind of contradicts as well in some way to do it now. But I'm sure the time will come at some point, unless something else happens, that we try to find some programs or ways to do something about the share price. But that's why we are very much out meeting investors to get in new people, especially in the DACH region. I think it's very exciting. We've been active here for quite some time now, and yeah, hope to get more interested parties here as well in regards to Epti.
Yes, thank you very much. We just finished on the dot. Thank you for all the answers on the great presentation.
Thank you guys, and yeah, wish everybody a continued great day, and thanks for letting us and having us here to present.